Hello, traders. Tis I, the Rumpled One, coming to you on Tuesday, May the 13th. The year's 2025. Let's talk trading. Trade like a chess master, part 2, with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. As always, have your risk management in place so you never lose more than you're willing to lose during any one single trade or any one single session. So Walmall, that last one, you've had quite the day today.
Yeah,
so,
yeah.
but I had watched a video about chess, and then I thought it could some of the lessons could be applied to trading. So I already did part one of the video or the first one, and I decided to do part two with you. And I made a little graphic based on that video. And so they were talking about the mental edge in chess versus trading, and then the brain benefits that mirror trading mastery. But I think the big one I like to see is why every move matters, where they say in chess, one careless move can cost the game. In Forex, one impulsive trade can blow your account. Lesson, think ahead, stay disciplined.
That is absolutely true, you know. And so many of these things, all it takes is one violation, and usually, it's either impulse control or emotion or a combination of both, and next thing you're in trouble. And it's sort of like today. I'll go and admit this. For the day, I was down 46 pips, and and here's the reality of it. It was an emotional reason that I got down there. Every one of my trades were a good trade. So let me just start off with that. I did not break any single entry whatsoever. I didn't get into, I did not go and jump in emotionally on any particular trade. I didn't go and just jump in because just for no reason. Every single trade that I got into was a trade that I got into because I had a valid signal and didn't violate a single one of my rules. That said, I just said that, hey, I got into that situation because of an emotional reason. The emotional reason was that I was actually up five, maybe even 6 pips on my trade. And what I saw on the chart was that it needed to get down to a particular level based on where it's been in the past, based on what the pound dollar has been doing. It needs to get down to this particular level. And the thing is, guess what? It didn't. And it turned around on me and ran all the way up. And I added in at proper places, you know, and I didn't violate. The good thing was I didn't violate any rules on those add-ins. I was going in at logical places based on my method. They just didn't pan out. It's just the reality of the situation. It just didn't pan out, and I wound up going and saying I pulled the plug at 46 pips. It didn't violate my daily loss. It didn't violate my weekly loss. Didn't violate any of my trigger points, and I even still had room to continue trading if I wanted to. And here's the reality of the situation is that because of that, because I didn't violate any of those things, I was able to go and continue trading after taking about an hour and a half off from trading because I needed to get my head back in the game. And I actually now at the end of the day, I have a loss today of zero point 0.1 pips. I'm willing to take that, after what I went through. And so I made up basically all the 46 pips. And, when you equate that to a chess game, it's the same thing. You can get yourself in a situation where you do every single thing right, but for whatever reason, the other guy on the other side just, he's got, he's got some skill that you don't have, or he's laying something out that you've never seen before, or he goes and does an effective way of going and bluffing you, and you can bluff in chess, and and the next thing you know, you're sitting there saying, wait a second, I did nothing wrong and I'm getting wasted here. And that's what can happen. And there's so many equivalents to that in trading. I did nothing wrong. The market, but I got bluffed. I got bluffed by the market. And the odd thing is that the sad thing is when my very first trade, where I thought it was going to get down to the level I thought it was going to get down to, guess what it did? It got down there. But it got down there after meandering around in the upward direction for, basically 2 hours, I guess, before it finally went and came back down to where I thought it was going to come down to. So that's part of trading, I guess.
Yeah. Well, see, the thing is, though, if you look at it, you had some emotional control there, right? If we
Yeah.
look at this chart, and then you had some pattern recognition, right?
Yep. Yeah,
And then
you're exactly right.
you stuck to your trading plan, which was take all the flip-flop boxes, right?
Yep. And eventually came back to where I needed it to go.
Yeah,
I I
in your emotional balance, you handled the drawdowns.
yeah. And the reason, and the thing is that I think it goes back to chess would call it strategic planning, and because I get on this on that chart that you had sent me earlier, like strategic planning on the chess side, and then on the forex side, trade setup and risk management, and the thing is that it absolutely falls under that because I didn't violate I didn't violate my risk management, and because of that, I was never in any fear. In fact, I talked to you right after this had all happened, and I don't think I seemed fearful to you in any way, shape, or form. It was sort of like I just said, yeah, it took 46-bit loss. You said, oh no, and I said, I'm still up for the week, or something like that, and that's the advantage of having, on the chess side, there's some type of strategic planning in place, and on the forex side or trading side in general, because this isn't just forex. This is any type of trading. I had a risk management plan in place, and I didn't violate any of my rules. And and because I didn't violate any of my rules, I've I've got room there to go and not you know not not be all worked up about it. Was I unhappy? Sure. Nobody likes to lose money, right? But at the same time, I was not pushed into a situation of, oh crap, how am I going to make the mortgage this month?
Right. And I think there was something you said there that was key that I bet there's a few traders out there could benefit from. You have your daily goal, you have your weekly goal, and you have a monthly goal. And I think you also have a yearly goal, right?
Yes.
Well, what you were saying was, hey, you know what? I'm down for the day, but I'm up for the week. And I think looking at it like that is probably beneficial because it's like, okay, nothing to worry about. I'm still up for the week. I've still got, a few more trading days left this week. And I'm having a bad day at the time. And you said, you walked away, you took an hour or so break. And then it's like, you know what? I'm going to get back in the game and see if I can make up some of the day's losses. And you just steadily did it. Just like me, on the other hand, I got in a trade. And the funny thing is, I knew when I got in a trade, there were two things against me. It was above the indicator two was aqua, meaning I should not be going short, and M30 was slightly green. But for some strange reason in my head, I'm thinking this I should short here. Well, guess what? I too rode that trade to like a minus 25 pips or something. And along the way, I was adding in and punching out. The one thing though, you know me and the one ball. So if I got in a short and it's going my way and I see a one ball, I get out because so many times that one ball goes against me. Now, every now and then, one balls will turn into two balls. And if they turn into two balls, I will stick it. But one balls, they just always kill me. And just in case there's somebody that's doesn't know what I'm talking about, I think I have the balls up on one of these trades here, on one of these charts rather. So, um, let's see if I can find the spot here. So right here, if I was long, like there was this flip-flop box trade here, and I saw that one ball, I'd get out. And you see what happens immediately. Um, and right here, I'm pretty sure that would have been a one ball that would have popped up there. For some strange reason, it's not showing a one ball. That's weird. But that would have probably, it looks like at the time it would have been a one ball. And I would have gotten out of that trade just because. And so, moral of the story is, yeah, it came back to where I thought it was. And the first two trades that I had a lot of drawdown, when price came back, I got out and I actually had 0 pips on both those trades. So
That's
I
the way
sat
it
in
is
those
sometimes.
trades over an hour to get 0 pips. But, along the lines on this drop, I was picking off 2, 3, 4 pips at a time. But as soon as, like right there, if I was in this trade right there, I saw that one ball, I'd be out.
Yeah,
And
and that's one of your hard and fast rules. You have that rule because what it does is, because of your experience, what you've learned is that it turns on you often enough, and so for that reason, you go and basically manage the money. That's what you do. You get out to manage the money, and
right.
that's a perfectly legitimate rule to have. But you got to stick to it. That's the thing. A lot of us don't stick to those rules that we learned through observation.
Well, and the thing is, it's like if price is moving and the one, and it's pushing the one ball, that's okay. But as soon as price stops, it's time to get out.
Yeah,
And it's like, do
exactly.
do I leave pips on the table? Yes. But the thing is, so many times, it it's a benefit that I don't get stuck in a trade because if I say, oh, maybe it's going to go further, and then all of a sudden, boom, it takes away the 1 or 2 pips, and which it can do in a blink of an eye. I was in
Oh,
one. I
absolutely.
was in one of those shorts. I was up like 2.2 pips. I punched out. It gave me half a pip. I just couldn't believe. I'm thinking, is my um, connection that slow, that lagging, that I'm trading in the past? you know?
No, I don't think so. I think the reality of the situation is that you're getting out of the trade at the same time that other people are either getting in to go the other direction, or people are getting out with you. And what happens is that that moment in time, it goes and dries up, and there's not a place for you to get in. And so what happens is you wind up getting a worse price than you see on the actual chart. And and you can see the reason why that happens, because let's face it, you're looking at a chart, I'm looking at a chart, Bob over there is looking at a chart, Charlie over there is looking at a chart. We're all seeing the same thing, and we're all either saying exit the trade or get into the trade. And so we're all jumping in at the same time. And then what our order block people would say is the liquidity goes and dries up. There's nothing there to take. And so because of that, price has got to move. And the thing is, price can move 2 pips in a tick.
Yeah.
We see it all the time.
Yeah, and just to let traders know, right now I'm going to post the trading like a chess master graphic here. I just put that out on my Facebook group, so you can all have it to look at. So you know what, Walmal, the fastest 15 minutes in trading is over. So fellow traders, hope you enjoyed today's video. And I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.